Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Monday, September 25th. We had a nice little bounce today. The question is, I think that's probably on a lot of investors' minds, is this the beginning of a bounce? Or is this a dead count bounce? So I will go through some market dynamics in this video where we will try to answer that question. Of course, I won't have 100% of the answer for you, but we'll kind of go through and see if we can formulate a little bit of an opinion. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. And then, of course, I will give you my viewpoint on exactly what I did today, and you could agree, disagree, and that's perfectly fine. By the way, we have a special offer here where if you go right to our homepage, TribecaTradeGroup.com, you could see what our members read at the end of every day. You can get our basically our trade file and what I think the themes of the day and kind of my thoughts on the day, as well as everything that I've traded and my watch list. So you could sign up for that for free I think you get that for 5 days when you sign up. But I think it's a really good glimpse. It's free, as it says, and you don't have to do anything else. You could just kind of check it out and see if it's something for you. All right, so there's that. So let's get into today's price action. So what I thought was pretty interesting today was, well, there's a few things. And before, I was going to start with the small caps today. I will get to the small caps, but let me get this out of the way first. Bonds had another huge down day. So, that's not a good look in terms of what the long end of the curve did. And again, when I look at this this chart, of course, this is bond prices. If you want to see, some people get this a little bit confused. They want to see what the yields are doing. That's fine. I can show yields too. Just know that it's inverted. So when bond prices go down, that means yields are going up. It's a one-for-one relationship. But here you go. And you could see, what we're looking at here is 2, 3, 5, 7, 10, 20, 30-year US Treasury maturities. And you could see that the yields right now, really where the big change was when you look at the 10, the 20, and the 30. The longer end of the curve is starting to, we've been in this curve inversion, which is still in place, because look at the 2-year, which did move up 1.5 basis points today, but so that's sitting at 5.12%, a very high level. But the 10-year and the 20 and the 30 are catching up, and they're catching up rapidly. So the 30-year is where I start with that chart, and that was actually the biggest move. So this is where it's important to remember that when we go over these relationships with what bond yields are doing and what equities are doing, right? I talk a lot about how when we have faster moving bond yields to the upside and a stronger dollar like we did today, that's a headwind for equities. But that relationship, and I specifically talked about this in our weekend video, but that relationship doesn't have to take place every single day, right? It's a general relationship. There are a whole bunch of other market participants out there, right? So like, after equities were down, how many days in a row were equities down? They are allowed to bounce, even though they were down 4 days in a row. Right in here is what I'm looking at. They can, of course, bounce at any time that they want to. If somebody thinks that they're a buying opportunity, they may not have that. They may not be looking at that relationship of bond yields, right? They can go out and do whatever they want, right? So not every market participant is going to look at that relationship of bond yields and the dollar. When they think it's a good time to buy, they may buy. It could also be a little bit of short covering too after 4 days, right? And the Jewish holiday coming to the second holiday coming to a close, right? So that's a little bit of thoughts about this. But do I like overall, do I like this market dynamics of yields going higher like this and giving back on Friday? We actually bonds rallied a little bit. So it could be that we're going to start taking out some of these lower levels here, right? And this goes back from some time. I mean, this goes back, for years. 2014, I think, is where a lot of this time frame is coming from. But this is starting to kind of come undone. TLT, which is a different maturity, that of course did the same thing, moved a lot lower. So, and again, if you want to see this in terms of yields, this is TNX, this is the 10-year index for yields. I mean, it is breaking out. I mean, so where this goes, we have broken through the level that I was looking for support. So, my opinion is on this is I think higher yields also affect different groups and different sectors differently. So I'm going to get into that in just a second. But yeah, it could be that we're heading down to that 110. But yeah, we did not hold the support. We broke through it, right? Which was the bottom of the value area. And I really thought that the price action was going to give it a valid attempt to maybe bounce there. I mean, we did bounce for like a week, but clearly, this is a breakthrough for that one. And then the other one, which is the other one that we look at quite a bit, is what the dollar is doing. The dollar is getting overbought here, but that's another move to the upside for the dollar. And I thought for today and overall in general, like I think equities are still handling it okay, even though we are seeing a lot of charts break down. We went over a couple of things in the international market this morning too. I talked about in the pre-market session, I talked about how some of these international charts are looking. They're not great, even though Chinese internet names rallied pretty decently from the open. But if you go back 5 years, this is just the Hang Seng in local. Whoops, I don't want to go max. I want 5 years. Sorry about that. This has not been a great chart all year long, right? I mean, this has been kind of just making making lower highs and lower lows here, and in a range that's been going down, and it doesn't look particularly healthy or good right now. Also, when you look at some of the international, the European indices, this is also a chart that I went over pre-market this morning, right? This is, even though this has kind of been going sideways, right? It's starting to really lean lower, and it's kind of, you could say that it's a complicated inverted, not inverted, but a complicated head and shoulders. Here's your head, and you've got like three or four shoulders here. Same thing on this side, but you could see it's it broke through the 200-day moving average, and this does not look strong at all, right? This looks vulnerable to a pullback. So I'm just providing a little bit of depth in terms of what global equities are doing right now. So on the positive side for today, and again, I think one of the themes that I would say too, and this is the case obviously every day, but one day is not a trend. So I would be careful with what is going on with the bond move and with the dollar. But let's start with small caps, because I thought that they made an interesting move today. If we go to IWM and we look at the 1-hour chart, and again, so this is super short term, and this is something to watch. Like I think a lot of people were played the small caps to the downside or shorted them. Notice where this found some support. Right. So this is what we want to see when we get to one of these version point of controls. I've mentioned this as we took some of them out on different time frames and different indices, some of which the word that I was using is that we just sliced right through some of those version point of controls. This is a better reaction to one, right? We clipped this and then we reversed, and small caps were down more than the other indices pre-market, and they actually finished up about 0.5% for today. So mid caps did actually a little bit better. They were up 65 basis points. That's MDY, and the Qs came alive like right at the end of the day to finish up about 0.5%. But that's a nice reversal, and super short term. If you're playing a bounce here, watch watch 176.56. But I would be careful with that. I would say bounce, because you could see we did get to an oversold level here. The RSI did get to, so while not everything got to like super oversold, this got to about a 30 RSI, right, and bounced a bit. So is that going to change the whole picture here? I don't think so. I think we need more time to see if we are beginning to move back up, or if this was just kind of a one-day bounce. All right, S&P, put in a nice little hammer bar, right? But the main thing is, and again, it's too early to tell. One day doesn't make a trend. I'll say it again, but price is also below the 5, the 20, and the 50-day moving average. So it's going to take some time for this to heal, and maybe it backs and fills a little bit. But we got very close to the 200-day moving average. As well. And I said I wouldn't be surprised in the weekend video to members. I said I wouldn't be surprised if we come down and clip that 200-day moving average. Now, where could this continue to bounce into? Well, notice we're not even into the bottom of value for the week. So that level's right around 4,400. And if you're really trading in the short term, and if you were looking for an opportunity to reshort, watch what happens when price gets up there to 44.01. Does it get rejected, or does it make it into the value area? So I think that'll be the question for me tomorrow. If we continue to bounce a little bit, are we going to begin to is that level going to be rejected, or are we going to see follow through there? So I think that's going to be important. For the Qs, similarly, this is a little bit closer though, but right around 360.43. So again, like all of this happening below the value area, it's not a strong move to me. Could it be the beginning of a move? Of course, but we just don't know that. And the first thing that we need to do is get into the value area for the week. All right. And again, super short term, but the moves have to start. They have to start. You have to be able to see things develop on the short term chart, in my opinion, first. And then you could kind of look to see what your levels are there. For some reason, I don't have my levels turned on here, but that's right around 363. Call it 363. I think it's 362.77, but we'll see if that can be overtaken as well. All right, so that's just a couple things, and I always start with the indices, obviously, in these videos. Small caps outperform especially from the lows. You could see that they rallied 1% over the session. Breadth was a little bit better today, right? And you could see that by looking at the sectors. How many groups rallied almost 1% for the day. Of those groups, what were the strongest ones? The energy stocks, once again, they have turned it a pretty healthy day. OIH was up 1.4%. XOP, oil and gas, was up 1.8%, right? And XLE was up 1.2%. The banks actually did well today too. KRE was up 1.4%. So these were your leading areas, and there were some other areas that did okay. The semis were up close to 0.75%. Materials and mining, they did okay for the day, but this was more to me. There was the momentum areas were energy and uranium, which continues to see all kinds of call buying. I mean, the CCJ has been nothing short of amazing. We saw call buying on Friday, and then we saw some today as well in CCJ. We also saw a call buyer in the uranium ETF. This thing exploded higher, up 6%, almost to that VPOC up there at 48. Right, this is 48.54. Right, so this might stall here. I would be mindful of that. I have this thing on in my longer term portfolio. I didn't take it off today, but maybe I take some profits tomorrow, because this thing is, I got long back in here. So I'm up a decent clip in this uranium trade, and I also own the CCJ too. Another name, you saw some call buying, and then also the power names were strong. This is CEG, which uses, I believe they use like a little bit of everything, alternative energy, to generate power. And this thing came out to basically just touch new highs. So, like, to me, This kind of makes sense too when you look at the next sector that I bring in that was super strong today was coal stocks, right? And what's interesting is it's not just one coal stock. If you go through the group, AMR, I start with that one because that's kind of my favorite one, but ARLP had a nice day up one. This is only a $22 stock, but you could see how this thing is moving very, very strong. BTU, I know people are familiar with this one. This one's been an underperformer, and I haven't traded this one in a while, but hey, put in up 3.4% today. CEIX is another one that people are familiar with. Put in one hell of a candle too. This is generally what you want to see like as a trend trader, by the way, right? We just don't have a lot of examples of these right now, but here's your check back into the 20-day moving average, held it like a champ, and then bounced hard on it, up 3.3%. Another one is Arch, right? So all of these, right? So, it's not by accident. There's some buying and some movement going on in these areas. Now, I started to say in the beginning of this video, about interest rates and, what does well when interest rates go higher like this. And in my opinion, interest rates make stocks more expensive. The names that can outperform are some of these stocks, which if you look at the PE of some of these things, they're under 10. But your higher volatility you're not volatility names, your higher valuation names, your more expensive names, your growth names, names that are not making much money or any money, right? They're going to be much more expensive as interest rates go higher. So I don't for now expect that group to outperform. Now there are cheap names in tech and in consumer discretionary too. So you can own some of those names, provided that this market kind of stabilizes, right, and gets back to maybe even more of a sideways move. But in my opinion, is with just what's going on with interest rates, you can own different names. And like IBM, I know this is not a exciting name, didn't outperform today, and I don't own any of it. I tried to trade last weekend and I got out of it pretty quickly, but this filled the earnings gap. And there's other names like even SMCI is not, which had a nice day today, is not that expensive of a name. The PE right now in SMCI, right, is a 20, is a 21. So, comparison to some of its peers, it's a little bit of a cheaper name. So I would rather own something like this. Now, this still, this is nice because it got inside its value area for the month, right? And the level to watch there is right around right, this 247 level, or excuse me, 244 level, but excuse me, is it 243? Like I said, I should have my labels turned on. Yeah, 243. So as long as it could stay above there, like that's a trade that you could do, provided that even though it's still in a weak position below the 20 and below the 50-day moving average, but you could try this up to see if it starts to reverse here, and your out is very close by, right? Is at 243. So I thought that was interesting, and those trends, what I discussed already, uranium has, of course, like with what we've seen in energy prices going up, that makes sense to me that uranium is a play, right? Nuclear energy is a play. And also it fits the theme of being cheap. So, what did I do, right? I've been going along that group quite a bit. Speaking of energy names, one name that I'm watching for tomorrow is CVX, right? This thing's been going sideways, and eventually it's going to resolve one way or another. My guess is that it resolves higher. And you could see it's starting to do that. It's had some trouble with this 168, 169 level, but I have a feeling that this time it's going to begin to break higher. And if equities, like I said, if they could stabilize for a couple more days, I think you're going to continue to see outperformance in these type of areas of the market. Other places that I thought are interesting, Select Healthcare. ABBV looks interesting here too. Also, I like the tight consolidation and the names trying to resolve. That actually looks a little bit similar to CVX, but it's trying to do the same thing. Another trade that I talked about, it's not to say that every software name can't outperform, but this one stood out to me last week. It was doing very well in a tough market, and it did take out that virgin point of control up here. So we'll have to see what it does here around this 81.73 level, but I thought pretty interesting. And then even on an update, I thought that there was a short opportunity. This was Dick's Sporting Goods. Like Nike got downgraded this morning. This is a name that had a real bad earnings quarter, and bad earnings report, and it's been going sideways, and it looked like it was going to resolve to the downside. Also note this really thin value area. When a 1 hour value area or any value area is super thin, tight like that, usually you're going to get a decent size move. So I put this thing on right in the beginning. It was my first trade of the day to go short on that break of the value area. I took a couple targets, and I'm riding the rest for now. Note, Nike does report earnings this week, so I will not be holding it through the earnings report. But that's a nice technical break. All right, guys. So that is it for today's video. So again, nice to see equities come back a little bit and not fade at the end of the day, which we've been seeing a pattern of. But you just have to be mindful that I don't think that we're out of the woods in terms of what we're seeing, as interest rates and the dollar are not confirming that this is going to be easy for all stocks. But if things could stabilize, you might be able to see continue to see some outperformance in select sectors and at cheaper areas of the market, right? Until something changes with interest rates. All right, guys, have a great evening, and see you tomorrow.